Tesla is down 5% in the last 5 days, and that should mean TSLY should be down, but not as much as Tesla, only down 1% in the past 5 days. And that's the reason when you do have a bear market, writing those calls, it does protect you against the kind of downward trajectory movement. So there's no surprise why my TSLY fund is beating Tesla, only down 1.5%. So this is a brand new feature that I've added in for those who've been following me right from the beginning. And if you are brand new, you can click the pinned comment down below, which will take you back to the first episode of creating my own TSLY fund. And what we're going to do in this video, we're going to look at how much money I made, how much money I made last week, the moves I made, where we are from a dividend standpoint, all that kind of good stuff. And all I ask for in return is that you smash that like button and don't forget to subscribe. So I'm going to start over here because let's just try to think about what we're trying to do. We're trying to build income and trying to synthetically trade Tesla to give us an artificial dividend through stock appreciation and through the income through selling covered calls. And you can see here that I have a total since I started, and I started on the 22nd of December 2023, and I've yielded just under $4,000 in quote unquote dividends. Technically option premium and option buying and selling through a synthetic. And again, check episode 1 out if you guys are brand new and want to understand how I do this. And you can see here that we are projected a dividend yield of 75%. And again, this number fluctuates week on week depending on how Tesla's performing. I've had it as high when I first started at 98%, low as 58%, but now it's currently trading around 75. And again, Tesla has gone down since I started back here in December, and it's kind of gone down, is now evening itself out. And we'll go through all of this in this video as well. But this is the goal. The goal is to generate that premium. I'm obviously down against the overall investment, but Tesla can't go down forever. So in my view, this fund can't fail unless Tesla fails. So that's one thing to kind of keep in mind. Eventually we'll have good weeks and bad weeks. I've had more bad weeks than good weeks, right? As you can kind of see here, we started off pretty well and then the premium started dropping. Then I had a few good weeks over here, the last weeks 8 and 9. And then we've got these 2 weeks here where Tesla has started to drop again. So again, in theory, it should even itself out. So I'm really excited to keep this journey up. And again, if you guys are enjoying what you're seeing, just show me that appreciation by dropping a like. So let's have a look to see what we did last week. So last week, if we go down here at the covered call perspective, we sold the 202.50 covered call. And we had a 200 synthetic. So our call strike was $2.50 above the current price. And I'll be honest, I was quite busy this week. As Tesla dropped, I could have rolled my call down to my synthetic 200 strike. I didn't do that. So I could have picked up another $100, $150, I reckon, inside premium. But you can see here that Tesla, we're currently trading at 191, was nowhere near the 202.50. So Tesla did drop, and you can see here that I've managed to buy back my 202.50 call option for $1, netting $358 of the $361 available against commissions. So that's what we did here. And again, that's 1.42% of my current balance of the balance that we had last week, which is absolutely fantastic in my view. Another $3.58 in 1 week doing that. However, as you can imagine, that my synthetic was in trouble with Tesla trading at 191 when I had the 200 synthetic. So this was the synthetic that we did. And I did close it out yesterday and reestablish. So I took a 708 loss here, taking the synthetic option, i.e. the stock appreciation or depreciation for this at $7,000. So you can see here when I started, I'm definitely going to be making a loss on the underlying, because the underlying just continues to keep going down. And I had those 2 good weeks when Tesla started to go back up. So I had 3 good weeks. I got appreciation over here, and I've got appreciation during this little rally over here. But in all of this, I lost money. So that's, again, this fund is really determined on Tesla as an underlying, as opposed to the mechanics of the fund. And so you can see here that we made the 358, but we lost $708, which therefore, gives us a situation here that if I was reinvesting the dividends back into the NAV price of where we're currently sitting at 25,289, we'll be down minus 16% in this position. However, because I am withdrawing out the dividends, we are 23% down on the overall kind of NAV piece. So this current balance does include that I am reinvesting the dividends. And again, this is what this fund 5-day ROI is looking at. It's assuming that the funds are kept within the portfolio. So that's kind of how that piece works. And if we, again, move forward to what we did this week. So as I mentioned, we closed out the 200 synthetic with Tesla trading at 190, 197. Just before market close, I opened up the 192.50. And again, I sold the 195 call against it for $360 or $359, which is what the premium is. And again, that's 1.4% of the account, which is the estimate. And again, it's an estimate because I could get some stock appreciation or through the synthetic call option, or I could roll down my call or roll up my call, depending on what I decide to do to capture more and more premium in the week. So I'm quite happy with where this strike price is in relation to the current pivot. So what I've added here is I've added a blue line here to kind of show you the covered call strike, so it's easily visually to see where my covered call strike is in a relation to the projected weekly pivot. So again, for those who are new, I like to have weekly pivots on my chart because the percentage chance of Tesla or any underlying hitting its weekly pivot is around 80 odd %. So it's quite high. And as you can see here, 1, 2, 3, 4, 5 out of the last 5 weeks it's hit its pivot. It's missed its pivot here. Generally what likes to happen is the stock within a few weeks likes to come back and test missed pivots. Not to say it will, Tesla could continue to go down or could continue to go back up. And the other reason why I like it is, again, it's used as, resistance levels, as you can see here, used as support levels. And again, you can see here last week, it just really hugged its weekly pivot point here. So again, I like to have these as kind of the main indicators along with the RSI, just for traditional oversold, overbought areas. And again, traditionally, it does work here. We hit highs, we were overbought here, the price starts to come back down. So the reason why I'm enjoying where my covered call strike is in relation to the weekly pivot, you'll see here that price is below the weekly pivot. So again, it's signifying it doesn't have to, but it can go up and then continue to make a low at the end of the week, but it looking to get to this pivot level, hopefully, if it's done it the last 5 times out of 5 weeks. So again, if you take this example here, the bar opened here, and again, it hit its pivot, came back down. Again, the start of the week was here, it hit its weekly pivot. Start of the week was up here, it came down to hit its weekly pivot. So again, we're expecting a move over here. And again, I'm not watching this every single day, but the gut feel is if we start hitting that pivot, that could be an opportunity to take the whole call and synthetic off, because I've got the synthetic at the 192.50. I should probably put the synthetic on here as well, to be honest. Yeah, 192.50. So therefore, the cover call is always going to be above the synthetic price. So if my cover call is breached, I've kind of capped my upside on the stock appreciation and just waiting for that covered call to kind of depreciate in value, so I can soak as much of the extrinsic value out of that call and close out the whole position and reestablish. So that's the goal. That's what I'm looking to do. That's kind of how I've been trading this. And that's, for the first time in a long time, I've had the stock price below the pivot level and my covered call also below the pivot level. So again, this is where the critical thing is. The pivot level is sitting at coordinates, so sitting at 195.84, and I've got the 195. So I'm pretty much at the pivot level, which is, I don't think I've been there for a while. So that's the piece that I want to try to continue, so I've got momentum or historic kind of price movements in my favor. So that's what I've got for you guys today. I really hope you've enjoyed the video. If you want to learn more, again, please hit the like button. Don't forget to subscribe. I've got a lot of other videos on here, but I've been doing this for a while now, thinking you guys are kind of enjoying this kind of content. So let me know down below, and I should see you guys in the next video.